Hey guys, this is Tony Benson with Wealth Builders HQ and creator of Patterns in a Flash. We're going to do a quick review of the patterns that we found last week for the pattern of the week that is accessible to those that exclusively subscribe to Patterns in a Flash. But before we do that, let's get the disclaimer out of the way. I am not a registered broker-dealer investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If we do mention a trade, assume that it is a practice or a paper trade. For regulatory reasons, we do not discuss funded trading. So let's take a peek at what we're going to look at again here. We've got a double bottom on Colgate and then a double top on Centerpoint. So let's hop right over to the charts and take a peek. There is Colgate-Palmolive, which that vertical line that I have there, let me zoom way in so you can see a little better. The vertical line is the day that we looked at it. The challenge with that was, which in the middle of earnings season, it can happen often, is that earnings was coming up the next day. So we had a little double bottom here, right? Nice little dolly pattern. The midpoint is right here. We're looking for it to break above that point. It did the day that I highlighted it, but then we had earnings, so we really shouldn't have gotten into the trade, and it wouldn't have been wise anyway. But it did just pop yesterday and give us an entry point on it. So it's one of those that if you kept track of it and you continued to watch it, then it may have been a good one to get into yesterday. We'll see. I don't know what it's going to happen today. Or the rest of this week. So we will see. But we got the plan in place, and we'll just let it play out. So here is CNP, Centerpoint Energy. This is a utility company, a little double bottom, triple top, or excuse me, a double top, triple top, whatever you want to call it. You know, quadruple top. There's kind of a double top here, double top here. Looking for it to do a similar thing to what it did on the last double top. And that is the day that we looked at it. Let me get rid of that line so we can see. There we go. So a little doji day. It didn't quite get back to the entry point. So whether you got into this or not is still, well, let's see. We still have earnings coming up. That's right. Actually, that is either today or tomorrow. It says 11/4. And so not sure what's going to happen with that yet. And you got to wait for earnings to hang out. So let's check in on all the other ones that are still on the radar. There were a couple that got knocked off. Cisco was in a head and shoulders pattern, but it broke to the upside. So it negated itself. So I kicked that off. But here's one that we looked at, I think, a couple weeks ago. Coupang, another double bottom that is playing out beautifully right now. It's not moving super fast, but it's still moving north, and it's about halfway to the target as of right now. So if you took advantage of that, then great. Disney is one that's still on the radar for a longer-term head and shoulders play, even though it's pretty much been sideways for the last 3 or 4 months. But it is still looking fairly bearish. Earnings is coming up here, looks like next week. So that is definitely going to be an issue, is the earnings thing. So we got to hang on and wait for that one to play out. KHC, Kraft Heinz, still in an inverted head and shoulders. In fact, this was highlighted, I think, about a month ago. I think it was right about here that we looked at it. And just kept it on the radar, keep watching it. And it is at a spot now. It's rallying back up, so we created another right shoulder. Looking for the possibility of a break into the upside. So we'll see how Kraft Heinz plays out. Morgan Stanley, this was, I probably should actually get a plan on this. I'm going to get rid of that. This is one that was bumping up against the head, kind of a head and shoulders, a double top, triple top, whatever you want to call it. But now we've hit that line there at 105 again and dropped off. Didn't sell off with a lot of volume, so that's not super convincing for the Bears. But we'll watch this and see how it plays out over the next day or two. And earnings is behind this one, so that's a good thing. We can now play it without having to worry about that. PBR, another one that was looking for a potential breakout to the upside. Kind of an ascending triangle. It's not really moving higher, which is interesting considering it's oil, because mostly, for the most point, most oil stocks have been going higher. This one has not. It's just going sideways still. So it's still on the radar to see if it takes off to the upside. But if it just goes sideways for another week or so, not that interested. Possibly, thinking about this little trend line that we've got in place, it's a short-term trend. If it holds here and then starts to move higher, then I might look at a bullish trade from this point on a bounce of that line. But that remains to be seen. And then Starbucks is one that kind of sort of played out the head and shoulders, but at the same time, you noticed it's earnings that created that massive gap. So we had the head and shoulders, big bearish engulfing pattern 2 days before earnings. Earnings came out, boom, it dropped right to the target, and then it rallied all the way back. The only reason I still have this on the radar is because we are back at the neckline. We filled the gap, right? We closed that window, and now we're back at the neckline. So if that neckline is going to hold, we'll have to see how it behaves over the next day or two, 3 days or so. If it holds this neckline and starts to roll over, then I'd be interested in Starbucks. Because, again, that's a huge gap. Obviously, earnings was probably not as great as people thought, but then it did bounce back right away. Closed the window, filled the gap, and now we'll look for a rollover to the downside. So that is it for the patterns of the week that we are still monitoring and watching. Hopefully, this has been helpful. And if you have any questions, those of you that are subscribers to Patterns in a Flash, you have access via email through the tool to get to me. If you're not, you can always get that free 2-week trial and check it out and see if it's for you. If it's for you, great. We do twice a month. We do a 1-hour web shop at 8 p.m. Eastern time, usually on Wednesday nights, every other Wednesday for the most part. And then you got a pattern of the week every single week, which is what we're reviewing here. And you got over 8 hours of on-demand video inside that tool to increase or improve your technical analysis skills. So with that, let me get back there and we'll sign off. This is the Pattern Whisperer saying if you're going to fail at one thing, fail at quitting. Bye for now.
Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I put together just for you.